Welcome to the Crypto 101 Show, the best place to learn, understand, and grow with your cryptocurrency education for all ages, starting with the basics to help you get a solid foundation with all things crypto. Your Chapter 2, More Terms, Ideas, and Teachings of Cryptocurrency, and a Hard Lesson I Had to Learn. I need to start off by saying this is not financial advice, so if you are looking for that, this show isn't for you. The content of this podcast episode is for informational purposes only. The opinions expressed here are not meant to be taken as financial investment or any other advice. Welcome to your Chapter 2 of your cryptocurrency experience. I want to say thanks from the bottom of my heart for listening so far, and I hope the episodes have truly helped you and kept you coming back for more. You've all been doing a great job so far, and I can tell many of you have been sharing this podcast, which is fantastic. The whole point to this podcast is for people to get educated in all things crypto, purely because cryptocurrency isn't going anywhere. I have tried very hard to consolidate a lot of information into shorter segments, almost like cliffsnotes for you. I think this, or for me at least, is easier to understand. Too much information can overwhelm many of us. So I hope this style of learning helps most of you. If you just found this show and are completely new, please start with the first episode of this podcast. It doesn't do you any good to get confused, and the process will be much easier starting from the beginning. With that out of the way, let's get started. We're going to start with more terms that I think are important, 12 to be exact. These terms come up quite a bit in the crypto community, and I think they are some of the more crucial ones to start understanding as you progress. It's okay if you don't remember these the first time around, but the more you hear them, the more you'll understand them. Microeconomics, the bottom-up approach. Macroeconomics, the top-down approach. POW, proof of work. POS, proof of stake. Arbitrage, ATH, all-time high. Bear or bearish. Bull or bullish. Consensus. Private key. Public key. Whale. Now let's go through each term more in depth. Number 1, microeconomics. Studies how individuals and businesses make decisions within the economy. Examples of microeconomics include why someone chooses to buy one product over another. The main area of microeconomics are interaction between supply and demand and scarcity of goods. Think of micro on a small scale like the individual. The bottom-up approach, in a general sense, is talking about an individual coin and its overall performance. Number 2, macroeconomics. Studies the decisions made by countries and governments. The two main areas of macroeconomics are long-term economic growth and short-term business cycles. Think of macro as the overall or big picture of it. The top-down approach is talking about the whole crypto market as a whole and its overall performance. I will be doing a more in-depth episode in the near future about micro and macroeconomics pertaining to cryptocurrency. For those of you interested in micro and macroeconomics, I highly recommend looking into Lynn Alden. She does a great job of explaining these in great detail. Number 3, proof of work. It rewards its miners for solving complex equations, which creates the next block in a sequence. Proof of work requires huge amounts of energy, with miners needing to sell their coins to ultimately foot the bill for mining the coin. This is what Bitcoin uses when adding the next block in its blockchain. Number 4, proof of stake. Rewards its miners for holding the most coins, which creates the next block in a sequence. This means that the more coins owned by a miner, the more mining power they have. Number 5, arbitrage. Simultaneously buying and selling a crypto coin on different exchanges in order to take advantage of differing prices for the same asset. For example, if Bitcoin is selling for $50,000 on one exchange and $51,000 on another, a trader or investor can buy the digital currency on the first exchange and sell it on the second for a modest profit. Yes, this can happen, but it's extremely risky. Number 6, ATH, abbreviation of all-time high. This means that the price of a certain cryptocurrency or coin has broken all of its past records, and now it is trading at the highest price it has ever achieved. Number 7, bear or bearish. A belief that prices will go down and will decline in value or eradicate a significant amount of wealth. An example of this is traders will make use of this expectation by taking a short position on an asset. They will make a wager that will pay off should the coin they invested in fall in value. Number 8. Bull or bullish. A belief that prices will rise in value or coins will gain a significant amount of value. If an investor or trader has the optimistic expectation of a coin's future increasing in price, it's described as being bullish. Number 9. Consensus. This is crucial to a distributed ledger system or the blockchain. The network for a digital currency reaches consensus when the network's nodes or participants agree that a transaction took place. All nodes or participants need to have the same information. Number 10. Private key. This is a secret, sophisticated number made by cryptography that allows a user to access their cryptocurrency. Each individual that partakes in cryptocurrency will have their own unique private key for holding their crypto. It's called a private key because it's meant to be kept private and not shown to others. Your private keys to your crypto assets are generated and encrypted locally on your device. Number 11. Public key. It's a cryptographic number or code used for transactions between parties, allowing users to receive crypto in their accounts as well as send crypto from their account. The public key is used to verify the digital signature, which proves ownership of the private key. You get a public key when you create a crypto wallet through an exchange or hot or cold wallet. Number 12. Whale or crypto whales. This term is used to describe a trader who makes large bets. The entities who hold a large number of coins of a particular cryptocurrency. This term is a good one to know, especially if you are trading crypto, because crypto market buyers, traders, and investors with the ability to execute very large transactions could potentially manipulate the market or, quote, make waves in the ocean. When I first started learning about crypto and diving in, I found it helpful learning the industry terminology, but nobody was really explaining them, so I had to dig for them. Certain lingo is highly unique to digital currency, making it unlikely that most people learning crypto would have picked these up when studying other asset classes like stocks, bonds, and commodities, or even just a normal discussion with other people. Recently, I was asked to give a quick story on one of my first failures in crypto, which I think goes along with this episode and understanding terms. Reason is, we all start somewhere, and I think it's important to know that. First, there were many failures on my part in crypto, and second, I still have failures on my part in crypto, even as the host of this podcast. But now, the more I know, the better I am growing at it. I thought this was a good idea to tell a quick failure story, and would probably help others understand there's a process to this all, and not to be afraid to make mistakes, sometimes because that's where growth happens. So here's one of my biggest failures in crypto. Back in 2016, I put $20 into Bitcoin through the Coinbase exchange. Bitcoin was still relatively low in price, or what low in price would constitute in today's terms. I was new to crypto and Bitcoin, and I had no clue what I was doing. I was also nervous about giving my debit card information to this random website, but figured, what the heck. So I put my money in, paid the miner's fees on Coinbase, and I saw my $19 now in my account. I exchanged my cold hard cash for Bitcoin. Doing my own research, I knew I shouldn't leave it on the exchange, so I moved it to a wallet called Electrum, and it sat on my desktop there for about a year and a half until I met one of my dearest friends now in 2018. We started to talk more about crypto, and as I rechecked my Bitcoin, I realized it had grown quite a bit. So I decided I better move this to an offline wallet just in case. At this point, I did more and more research on what I should do with it. I bought myself a nano ledger, and with my first initial investment of $20, I decided I needed to move it. Nervousness rushed in, but I knew I couldn't mess this up too bad. Dude, was I wrong. I should have taken the advice of some internet strangers who commented on a Reddit board that I had read earlier. They said make sure to break up your amount into 2 transfers just in case you move it to the wrong wallet. You don't want to lose it all. This was strictly for doing it for the first time. So instead, I got my private key ready for my Ledger wallet, or what I thought was my private key, and inputted it into my Electrum wallet on my desktop. I hit the send button and waited, and waited, and waited, and waited. I waited until the next day and checked incessantly and hit refresh on my Ledger dashboard desktop app hundreds of times. The funds never came. What does this mean, you are asking? that my Bitcoin is either in Bitcoin purgatory floating around forever, or someone got a generous gift of Bitcoin from me. I still fortunately had other Bitcoin I had purchased from earlier that year before transferring, but this still stung hard. Until this day, my friend and I joke about this debacle. We actually still transfer stuff together on the phone so as to not make the same mistake. I learned my lesson big time from this, and I think this should help you too. While I am still mad at myself, making mistakes is part of learning though. I still transfer Bitcoin to my Ledger wallet whenever I buy some, but I am much more confident now. That was my biggest failure as a crypto investor. It's an embarrassing story to tell, but I will own every bit of it. And if it helps any of you, then it was a story worth telling. So welcome to my biggest failure, and I hope nobody ever repeats it. On that note, I want to be extremely upfront that I try my best to leave all of my opinions out of this. I want you to gain your own understanding and beliefs and not be persuaded by me. I hope this helped you gain a better grasp of it. Please remember to share, follow, and subscribe for future episodes so you can gain more with your crypto knowledge. Thanks for listening, and see you next time. Thanks for listening to this episode of the Crypto 101 Show. If you'd like to join our email list, email us at thecrypto101show@gmail.com. For more helpful tips, subscribe in your favorite podcast app so that you don't miss our next episode.